This content reflects my own personal opinions and is not financial advice. With that said, let's kick off today's episode. Global wealth is converging into three unstoppable forces: Bitcoin, real-world assets, and AI. These asset classes are no longer separate. They're merging into a single, self-reinforcing portfolio that institutions are already rotating into. The real question is, are you positioned in the only portfolio built to survive the 2030s digital intelligence economy? Alright, so this is a table that I've actually prepared that would actually help me go through, in my own personal opinion and for my own experience, my own journey as to how I've actually moved away from rather poor 20th century portfolio that I had, where I had a UK pension scheme and I invest heavily into these diversified ETFs across different jurisdictions. And during the 20-year running period that I've held those assets in the pension scheme is actually only rendered 20%. So 20% over a 20-year period have actually let me create this channel in the very first place. So ever since I did a 360-degree overhaul review of my 20th century portfolio, I've decided on three key areas, which for me are the growth engines that is fit for the 21st century digital intelligence economy. The first of which is digital capital, followed by digital utility, and finally digital intelligence. Now, if we start off with digital capital, we all know about Bitcoin. You might have heard that it's the ultimate hedge against debasement, currency devaluation, and it beats the cost of capital, i.e. inflation, which is in the early teens. So you can forget about what the governments usually tell us, which is 2%. That is complete and utter falsehood and a fallacy. We all know that the actual genuine basket of goods that actually depict the true rate of inflation is oscillating in the 10, 11, 12, 13%. Now, if you're in other areas where there's high inflationary environment, well, you can easily move towards the upper end of that spectrum. So with that unique set of challenges and difficulties, where we find ourselves in a hamster's wheel, where we're continually trying to fight our way through and beat this common enemy, which is inflation. But if we add that, entropy, chaos, and the shenanigans by those politicians, it just makes it really difficult to find, well, what are the assets where we can ultimately park some of our 20th century wealth as a refuge into this digital capital. For me, ultimately, is Bitcoin. And as I said here is, why is that? Well, if you've watched several of my videos in my channel, which is all the reason why you want to subscribe, just to learn a little bit more without the FUD, the noise and the hype, that is my channel. It's really treated every day now as that leading store of value, anchoring digital wealth and sovereign trade liquidity. It is institutional grade digital gold with ETF access, acting as that balance sheet legitimacy and ultimately that sovereign adoption momentum. We're seeing every week pretty much a brand new announcement where even sovereigns, nation states, are adopting Bitcoin as their national strategic reserve. We are all familiar with the famous January executive order by Trump confirming that the US at a federal level is going to incorporate Bitcoin into its national strategic reserve. And we have plenty of other examples of other governments. There's well over 30 governments that have actually adopted Bitcoin, whether it's through as a strategic reserve initiative or through seizures and confiscations, right? It is around $2 trillion. So that is digital capital. And this is where I've actually invested part of my long-term holdings into Bitcoin rather than anything else. But that's just, as I said, is my own personal experience and journey. The next set or the next classification type that I want to bring to your attention is what I call digital utility. Now, this is where the rest of the thousands upon thousands of RWA, real-world asset coin projects fall under as a classification. But there's only one or two or three that for me personally, I see the most value, I see the most traction, the most amount of TVL that's been locked into those assets and coin projects, and the most news and developments that I'm seeing through my midweek specials, and my Friday desk review. So what are the top 2 or 3 real world asset coin projects that would fit under this digital utility classification? Well, for me, the first one would be the smart contract programmable blockchains. What are the leading smart contract players in DeFi that are used to program and build those dApps, those decentralized applications on the blockchains? Because without smart contracts, RWAs would just simply don't exist. We need to have smart contracts, which are the programmable method available to build new dApps and to plug a gap in the marketplace, the purpose of those RWAs. So smart contracts equals RWAs. So for me, the top smart contract blockchains that I'm seeing is Ethereum and Solana. Solana is like the newbie in the block, and the original smart contract, the actual first smart contract, was Ethereum. I actually programmed in its native programming language, which is Solidity. So Ethereum is that dominant layer 1 smart contract blockchain system. It's used to build those dApps in DeFi. It is certainly an enterprise grade tokenization infrastructure for issuing and building those RWA coin projects and even issuing tokens themselves. So if you look at its TVL as it currently stands, it's almost $68 billion of TVL. So it's huge, right? What is the next new kid in the block in the smart contract programmable blockchain space? Well, it will be Solana, because Solana is, again, a layer 1 smart contract blockchain, but it has high throughput and more optimized for consumer and financial apps. What this means is it's actually faster. It's also cheaper to roll out and run these Solana smart contracts or dApps on the Solana blockchain itself rather than in Ethereum. So that's why it's always good to have an alternative, not just relying on the leader, but what is the next new kid in the block that is gaining traction over time and catching up. So for me, Ethereum definitely as a king, but the number 2 in the smart contracts space is certainly Solana. And if you look at its TVL, it's half the size of Ethereum. It's $35 billion of TVL. So this is something we should not dismiss. And for me, in my personal opinion, Ethereum and Solana will definitely should be considered as part of the digital utility type RWA coin projects that you should look into and invest a proportionate amount of your wealth in your portfolio into these assets. Well, there's 2 others that I'm seeing there is a lot more momentum and acceptance and endorsement in TradeFi. And it's to do with oracles, Chainlink fundamentally. And that's still part of the digital utility classification, the RWA space ultimately. What is an oracle and why Chainlink is so important? As in previous episodes in my channel, I explained that there is this recurring need to bring the physical analog data into the blockchain arena because the native shortcomings of a blockchain, any blockchain system or coin projects, it lacks that real life data. It doesn't have any real life data. So in order to plug this gap in the marketplace, you need to have oracles to bring in the data from outside into the blockchain space. And for me, Chainlink is the father of all oracles. It's certainly the king of all oracles, because in many of my episodes, I made several news announcements where there is that growing dependency on Chainlink because of its oracle infrastructure, connecting, as it says here, real world data into the smart contracts in the blockchains. So Chainlink by far is the leader in the oracle space. It's a critical middleware for RWAs, DeFi, and cross-chain interoperability, powering those institutional grade data feeds. And the market cap is not small either. It's almost $10 billion. So as an oracle feed, definitely Chainlink should be in your top of the list. Now, just a short break as a reminder, if you're finding this episode adding value, make sure notifications are enabled. We cover Bitcoin, blockchain technology, and real world assets without the noise and the hype. So stay informed and stay ahead. Now, let's get back into today's episode. And then finally, to end the digital utility classification, is the notion of settlement rails, the actual money rails that we need to draw in the capital wealth from outside, from TradeFi into the blockchain arena. For me, ultimately, there's 2 interesting RWA coin projects, XRP and stablecoins. So like Tether and Circle, those are the private issuing firms that issue these digital currencies on the blockchain. So between XRP and stablecoins, they are acting like the plumbing infrastructure that brings in the fiat wealth from outside into the digital realm, into the blockchain systems. So we can actually use that as a medium of exchange to buy goods and services on the blockchain. I'm seeing news pretty much every day talking about XRP and talking about stablecoins. So really, as to end this digital utility classification, if you look at its TVL, XRP is looking at 131 billion, but it's still half the size of the global stablecoin market, which are predominantly Tether and Circle. So if you add these two figures together, it is almost 300 billion, which is more than double the size of XRP. But that's why it's always good to look for a couple of good candidates. So the top one in the settlement rail space are stablecoins, more than CBDCs, right? CBDCs you can forget. Stick with stablecoins, and in second place, XRP would be my advice. And then lastly, to end this digital intelligence economy portfolio fit for the 21st century, is the notion of digital intelligence, AI in other words, right? We all are using or should be familiar about using ChatGPT or Microsoft Copilot in our day-to-day, whether it's at work or at home. So how is that managed? Well, it's managed fundamentally by AI chips, the actual hardware, the actual backbone that are used to power the computing for this digital intelligence layer. And for me, I've invested quite a bit in NVIDIA many years ago, because it is the dominant GPU provider. It used to be, or still is, it has started out as a games chip provider, but now it's extended that clearly into this heavily intensive AI computing chips, which are called GPUs. So it is that dominant GPU provider for AI, blockchain and data center growth, the actual engine room of digital cognition. Now, if you look at its market cap, it's not small either. It's actually, I think, the fourth most valued asset class in the world, right? It's almost $2.2 trillion on market cap. And then lastly, as a number two play to NVIDIA, I would suggest AMD because, again, it has $350 billion, pretty much a tenth of the size of NVIDIA in terms of market capitalization, but is gaining momentum, right? It is definitely working with those AI foundry players and other Taiwanese manufacturers, because NVIDIA and AMD don't manufacture the chips. They simply hold the patents and design of the world-class GPU, and then they hand off the design, the actual manufacturing of those designs, to the AI foundry partners. But there's plenty of other players out there, and even got the Max 7 who've made multi-billion-dollar capex expenditures or orders for these GPU sets from the likes of NVIDIA, AMD, even Intel, and some others out there. So this is where it's so important that you should look into AI, because it's a multi-trillion-dollar industry. So that is really what I like to go through with you as to how I've targeted my portfolio, is between digital capital, which for me is Bitcoin, the digital utility, what are the top RWA coin projects? Well, smart contracts, Ethereum, Solana, Oracle's, Chainlink, and then the settlement rails in XRP and stablecoins. And then just to round off this portfolio that I have set up for myself is AI, in digital intelligence. So it's NVIDIA and perhaps some stocks in AMD. This portfolio, for me personally, captures those three foundational layers of the 21st century digital intelligence economy. Bitcoin as that leading digital capital for sovereign grade liquidity, as it says here, RWAs and smart contract platforms as digital utility for programmable finance and tokenized infrastructure. And then lastly, AI stocks as digital intelligence powering the exponential layer of cognition and automation. Now, together, for me, these assets form a resilient, high growth allocation that aligns with macro trends, institutional capital inflows, and the infrastructure phase of digital transformation. So for me, this is not just future proof, it's the actual engine of prosperity in the digital age. That's all I have for you for today. If you value clarity on Bitcoin, blockchain technology, and real world assets tokenization, stay alert. Subscribe and enable all notifications to stay ahead of the curve. Share this episode with those who need to understand what's coming, friends, family and colleagues. This channel aims to deliver insight, no noise and no hype. Subscribe now.